Hey everyone, welcome back to the channel. Bitcoin just went through one of the most anticipated events in crypto, the halving. It's a big deal. Some say this is the kickoff to the next mega bull run, with predictions flying around that Bitcoin could hit $180,000 or more. Others, they're calling it smoke and mirrors. They think we're heading into a massive fake out. So today, we're cutting through the hype and giving you the real picture, what the halving actually changes, why this cycle is not like the last, and whether we're about to rocket to new highs or get slammed with a correction. This isn't just another crypto hype video. This is your post-halving reality check. Bitcoin halving explained, and why it matters. Let's start with the basics. What is the halving, and why do people care so much? Bitcoin runs on a system where miners get rewarded for securing the network. That reward comes in the form of newly created BTC. But every 210,000 blocks, or roughly every 4 years, that reward gets cut in half. This most recent halving dropped it from 6.25 BTC per block to 3.125. That might sound technical, but the impact is simple. There's now less new Bitcoin being created every day. This is built into Bitcoin's code to slow down supply over time. It's part of what makes Bitcoin deflationary. There's a hard cap of 21 million coins. So when supply drops, but demand stays the same or increases, prices tend to rise. That's why every past halving has eventually led to a major bull run. It's not magic, it's supply shock economics. The bullish view. Why $180,000 might be conservative. Let's talk about the bullish case. Why are people throwing around numbers like $180,000, $250,000, even $500,000? First, the supply squeeze. We just talked about halving reducing the number of new coins entering the market. But here's what's different now. For the first time ever, this halving is happening while major U.S. investment firms, BlackRock, Fidelity, Franklin Templeton, are actively buying BTC through spot ETFs. These ETFs are pulling in thousands of coins a day. Some days, they're buying more Bitcoin than miners are even producing. That's huge. It means demand is outpacing supply by a lot. Second, the macro picture. Inflation is slowing down. Interest rates might start to drop, and traditional investments like bonds are looking weak. People want yield, growth, and security. And for a lot of them, Bitcoin checks all three boxes. It's being treated more and more like digital gold. And then there's the technical analysis. If you overlay past cycles on today's price action, the patterns line up. Bitcoin often makes its all-time highs 12 to 18 months after a halving. So if history repeats, we could see a new peak sometime in 2025. That's where the $180,000 forecast comes from. It's based on math, not dreams. The bearish case. Why this could be a trap. Now let's pump the brakes and talk about the bear case, because there are real risks here that too many people are ignoring. First off, the market knew this halving was coming for years. It wasn't a surprise. A lot of the bullish expectations might already be baked into the current price. That's called a sell the news event, where the hype lifts the price before the event, but things stall or crash after it happens. Then there's regulation. The US government, the SEC, and other global regulators are watching crypto closer than ever. Any sudden announcement, a crackdown, a new restriction on ETFs, or even a negative court ruling could spook investors. We saw it with Coinbase lawsuits, Ripple drama, and Binance fines. Regulatory risk is real. Also, macro risk. If inflation picks up again, or the Fed decides to hold interest rates higher for longer, that could hurt risk assets, including Bitcoin. Add to that geopolitical tensions, recession fears, or even a black swan event, and the bull case starts looking a lot shakier. Why this cycle is different from 2020 or 2016. A lot of people are treating this cycle like a copy-paste of the last one. But that's a mistake. This cycle is different in several ways. First, institutions are actually here now. In 2020, institutions talked about Bitcoin. In 2024 to 2025, they're buying it. The ETFs are the biggest example of that. This changes market structure completely, more long-term holders, less emotional trading, and a slower but more stable demand wave. Second, the crypto market is more mature. Back in 2017 or even 2021, the space was chaotic. Today, we've got Layer 2 scaling, more secure wallets, clearer regulations in some countries, and tools for managing risk. This means the market might not move as fast, but it could also mean fewer 80% crashes. Third, AI trading is on the rise. Algorithms and bots are influencing price movements at scale. This changes the way breakouts and corrections behave. It's less about crowd psychology and more about liquidity zones and auto-trading triggers. That means traders need to rethink old strategies. What smart investors are doing right now. So what's the move? What are smart people actually doing after the halving? They're not betting the house on $180,000 overnight. They're dollar cost averaging, buying in slowly, steadily over time. They're watching on-chain data, wallet activity, exchange inflows, miner selling. These metrics offer clues about future price action. They're diversifying, maybe 60% in BTC, some in ETH, and some in key infrastructure plays. They're also holding some stable coins to buy dips. No one's trying to time the exact bottom or top. They're playing long-term, and they're keeping emotions out. The people who make money in crypto aren't the ones who yell the loudest online. It's the ones who stay calm, make a plan, and stick to it. How to stay safe in the hype. Look, when Bitcoin moves, scammers swarm. They know people are excited, distracted, and eager to get rich quick. So here's how to protect yourself. Don't fall for guaranteed returns. No one can promise gains, period. Ignore fake influencers. Scammers buy fake followers and run paid promo scams. If you haven't heard of them outside one viral tweet, be skeptical. Watch for copycat coins. If someone launches halving coin or Bitcoin 2.0, ask hard questions. Who's behind it? What's the use case? If it's vibes only, stay out. Never give out your seed phrase. If someone asks for it, they're not helping. They're robbing you. Is $180,000 on the table? So let's wrap it all up. Is $180,000 Bitcoin possible? Yes. The supply is shrinking, institutional demand is growing. And historically, halvings do drive price increases. But the risks are also very real. Overhype, macro shocks, and regulatory pressure could derail everything. What matters most is your strategy. This isn't the time to panic buy or sit out entirely. It's the time to move with intention. Understand the landscape, protect your capital, and play the long game. All right, now it's your turn. What do you think? Are we headed for a six-figure Bitcoin? Or is this all one big bull trap? Drop your predictions in the comments. And if this breakdown helped cut through the noise, hit that like button, subscribe, and share this with someone who's deep in halving hype right now. Stay smart, stay grounded, and I'll see you in the next one.